Hello and welcome to Mindful Money. I'm John Lappin, editor of Mindful Money, and today we're talking to Shaun Richards, the independent economist who contributes daily to our economics coverage on the website. So Shaun, we have seen that inflation is now at 2.2%, or certainly CPI anyway. Does this mean, because it's getting quite close to the Bank of England's target, does this mean that everybody's a winner now?
Not quite. It's better than before, but we've had a sustained period where it's been over target, nearly 4 years now. That's led to problems with the real wage crisis, cost of living crisis that's come up in the media. And also compared to our peers around Europe, we still remain at a higher level, so that there's a cost there in comparative terms, that we remain more expensive than them.
You've put together a bit of a critique of forward guidance, but this suggests that maybe rates aren't going to have to increase for a while, so that means maybe forward guidance is kind of working. Maybe it was a reasonable idea to have at the start, or?
Not really, I don't think so, because to credit it for successes now when it only started in July is a bit much if you think of the timing. But my fundamental issue with forward guidance is that you're making promises about a future you don't know. You can perhaps, in the credit crunch era, look 3-6 months ahead. Then things get very hazy, very foggy. And if you have any honesty in you at all, you then have to admit that you don't really know. And so to make promises 18, 24 months, in the extreme cases of forward guidance, 3 years forwards, I don't think washes.
Okay, so that's one aspect of Mark Carney's approach that you might not agree with. What's actually wrong more generally with his approach in your opinion?
It comes back to that because that's really the only policy he's appeared with so far.
And that follows on from concerns about the Mervyn King regime as well. So what was wrong there?
Well, that was, as I suggested in my answer to the first question, inflation friendly or inflation light. He always wanted the pound to fall, always with the consequence that inflation would be higher, which led on to the real wage crisis and the cost of living crisis that we're experiencing now. And he didn't expect things to play out like that, but there are always great risks in what he did. And the cards fell badly, not for him, because he's done very well out of it, but for the UK economy and individuals in it who've been hurt by the consequences of his policies.
So if I asked you to put yourself in the shoes of Mervyn King, say, and maybe not for the whole period, but say we've had the credit crunch happen, say we've had some banks fail, say the government, certainly this side of the Atlantic and the other side, and even in mainland Europe, they've had to come in and rescue banks. If you were in charge of the Bank of England policies from that point, what would be your approach?
Well, there would have been a difference in the rescue. If we go back to Northern Rock, would have started differently there. And actually, I think Mervyn King intended to do this. Somewhere he either got lost or politicians diverted him, which was you support the depositors in Northern Rock, but you let the other bits fail. That would have then sent events on a different course. Now, obviously, I can't say exactly what that was because it didn't actually happen. But my opinion is, in terms of issues like moral hazard, it would have been very different. And places like Royal Bank of Scotland might have changed their behaviour. Now, that's a might, I don't know that. But I do know that since then, until now, we've continued on a path whereby, compared to the banks, we've always been weak. We could have started from a much better position, I think, and a whole different train of events would have taken place.
More generally on other monetary policies, because you've a strong view that, for example, savers have been punished by the set of policies that have come from Threadneedle Street. What would you do about those as well? Or is it simply you have to start in the right place? What if you had to start in the wrong place that you couldn't get the government to?
Well, I think also I would have argued for not as lax monetary policy. I'll be very careful. I nearly said the word tight and made the mistake myself, because what I mean by that is things have been extraordinarily lax. Yes, we needed easing, not disputing any of that. But for example, they kept throwing money at quantitative easing and it now amounts to 375 billion. And they have no measure at all as to whether the last 75 billion did any good, 100 billion, 200 billion. In fact, I would argue that after the first burst of it, 75 billion maybe, that should have been the lot. Okay. And again, so we would then have a quite different path to now.
And you have a little bit, could you briefly give me your views around the inflation measures as well, because you have concerns about that and
yes, no, I've spent quite a lot of time on this, and there's I was one of those, if we go back to 2002, 2003, who argued against the introduction of the European-style measure of consumer price inflation that we have now, and argued for retail price inflation. That came up about a year ago, where I was involved in a campaign to keep the RPI as opposed to CPI, for that reason that, just to pick one example that's in the news right now, RPI covers house prices, CPI does not. Now, RPI doesn't have a perfect measure, don't misunderstand me on that, but at least there was some element in it, and perhaps you could then modify it out. In fact, that would be my argument, to put more in it. They had the opportunity to do the same with CPI, except they botched it a year ago, and they put in rents rather than house prices. So we now live in a bizarre world whereby this morning we announced that inflation in the UK, including house prices, is below ordinary inflation. How does that work when you can't pick up a newspaper or magazine anymore without seeing it discuss rising house prices?
Okay.
So the whole system, I'm afraid, is very wrong, in my view. Completely wrong as to how to go about measuring something. And it is a national scandal were there to be enough people sort of interested to, take that forwards.
Okay, so if I've already asked you to potentially put yourself in the shoes of the bank governor a few years ago when the crisis was fresh. Now, the crisis is certainly an old crisis, but many aspects of it are still continuing. If you were in charge now, if you were in the bank now, what would you be doing to try and change things?
Several things. I would look for better measures of inflation, and that's across the board. For example, there is one in the GDP numbers that we get presented each quarter, and people take them as gospel. That, in my opinion, is in an even worse state than consumer price inflation, and may be telling us something, it may be telling us nothing. And so that would be on a theoretical level where I would start, because we're being told growth numbers that could easily be very wrong. In terms of other factors, if I was governor right now, I would be looking to follow another principle I've established, which I think that people in such roles should be elected. So I would offer to resign and stand for election.
Okay, very radical. Now, you've probably answered this already. This is my final question. You answered this already in part anyway, but what's your motivation for writing the column then? What drives you to do it?
My original start on this sort of thing was walking home from the city one night and thinking that some of the moves by the Bank of England were wrong. I had a city audience, but no wider audience. That's why I began blogging, because I thought that some of the interest rate cuts were a mistake. I still do. We should have A, kept some of the ammunition back, and B, there are also arguments, as actually we're seeing everywhere now, where the closer you get to zero, the less effect an interest rate cut has. So I was thinking some or all of those thoughts then. That's why I began. Since then, the things that have kept me motivating is actually I watched someone recently shopping in the supermarket. I thought to myself, she was struggling to pay for that, putting things back. And this is back to my thing on inflation, that sort of thing. These are very important issues. People are really struggling right now. And I firmly believe that if you have views on that, then you should get them out there as best you can.
Okay. Thank you, Shaun, for talking to Mindful Money today.
My pleasure.